where we will explore sustainable finance, responsible ESG reporting, and materiality in corporate sustainability strategies. Let me introduce to you sustainable finance leader, Audrey Cauchet, who will guide us through many important topics, getting back on track with ESG Agenda 2025. Today, Audrey will walk us through three crucial aspects of ESG reporting: the top global risks identified by the World Economic Forum and the impact on financial strategies, the challenge of greenwashing versus actually greenhushing, how companies can maintain transparency while avoiding misleading sustainability claims, and Materiality Matrix, a framework at the heart of any robust sustainability strategy, as you know. And I would like to emphasize that Audrey is a unique specialist in the field. She's a sustainability and risk officer at One Swiss Bank, where she plays a key role in integrated ESG principles into financial strategies. With over 13 years of experience in the banking sector, she has specialized in corporate social responsibility and regulatory affairs. Audrey, thank you for being with us today. The floor is yours. And we are very excited about your part. Michael, next slide, please.
Yes, thank you, because I was muted. So thank you, Julia, for this amazing introduction of myself and for the invitation as well. So I'm glad to be here today. So Miguel, I have to say next slide. That's the rule? Yeah. So next slide, please. So no worries. It's not a copy paste of Michael's slides we saw at the beginning of this webinar, but I wanted to insist on the first top global risk identified by the World Economic Forum in its last study. So it is an annual survey. And so as you can see on the short term, the first risk is misinformation and disinformation. And so for sure, this is a route for greenwashing. So that's why I wanted to insist on that aspect. And what is very alarming for me is the fact that if you see at the bottom of the slide, in the second column, so biggest increase in rankings. So this is increase from 2024 to 2025. And so you can see that misinformation and disinformation is the first biggest increase in ranking with 15 points. And so I think that it is very alarming because it means that due to social networks, especially, we are a bit blurred by a lot of information. And when you are not an expert of a topic, it's very difficult to identify what is wrong and what is right. So that's why I wanted to show you these figures. Next slide, please, Michael. So to say some words about greenwashing. So I don't know if it was clear for you, but greenwashing is a global concept and greenhushing is a part of greenwashing. So to start with greenwashing, so we can say that it is a misleading information about environmental practices. So as I work in the banking sector, I took an example about the prevention of greenwashing in the Swiss financial sector because I don't know if you are aware of it, but the Federal Council decided to use a self-regulation. So the Asset Management Association Switzerland and the Swiss Banking Association disclosed what we call self-regulations to prevent greenwashing in the financial sector. And so one of the aspects is the fact that you need to identify the difference between responsible and sustainable investing. I know that when you read an article, we regularly read ESG investing, but it does not mean anything. ESG is a way to use criteria to define a type of investment. But for instance, when you do impact investing, it is considered as sustainable investing. But when you do only exclusion of controversial activities, for instance, it is only responsible investing. So it's not so ambitious. So I think it's very important to define the two terms because I think that for people, responsible is equal to sustainable, but it's really, really different. Concerning greenhushing, so as I said, it is a part of greenwashing. And so it is a way to minimize or ignore some negative environmental impacts. So as you know, with the Paris Agreement and the Swiss energy transition, so the aim is to be net zero by 2050. And so a lot of companies were very proud to say that they will be net zero by 2030, 2040. So it was like a race to be the first to be net zero. But sometimes when you see this type of information, for instance, in a sustainability reporting, it's you need to be very careful because it really depends on the way you calculate your greenhouse gas emissions. I mean that if you miss a part of the value chain, it's really different to be net zero compared to a company that takes into account all the value chain. Or another example, if you say that you are carbon neutral or net zero because you bought a lot of carbon credits, it's very different that trying to minimize at a maximum your level of emissions, and then for the last 10% you buy carbon credits because it's not possible to reduce these residual emissions. So for me, you have to keep in mind four key questions. It's not exhaustive, but I think these questions are the most important. The first is to be careful with what we can call marketing terms like green or eco-friendly. You may know that in the European Union, now it is forbidden to use this type of terms, except if you are able to justify the use of these terms. So for me, it is a good sign, and I hope it will be the same in the future in Switzerland. The second point is, do we have the possibility to have evidence on environmental commitments of a company? I mean that, so I don't want to do name and shame about some companies, but if you see a big figure about avoided emissions, if you have no justification on the way the company was able to avoid emissions, it does not mean anything. So you need to challenge this type of information. And I clearly know that it's really, really difficult if you have not the background. But if a company is sincere and transparent, this company has to provide a methodology and some evidence of the data disclosed in a sustainability reporting. The third point is about what type of certification or label does the company refer to. I mean that some label, so Michael say some word about B Lab and the B Impact Assessment. So the B Corp certification is also considered as a label, but I think that you really need to be careful because some companies have developed their own labels. And so you don't really know what is behind. So for me, a norm or a certification is generally more ambitious and more auditable than a label. So please be careful about that. And last but not least, I think that the fact that a sustainability report has been audited with a limited assurance or maybe one day a complete, so reasonable assurance is like a way to be sure that the information has been verified and checked with data and with discussions with people within the organization. So yes, sorry, I don't want to be too long, but just remember that all of us, we are part of the civil society, and so we are all a stakeholder of any company all around the world, and so we cannot challenge the information disclosed. So here is an example of what we call a materiality matrix. So it's not a double materiality matrix, but a simple one. And this is an impact materiality matrix because it is based on the Global Reporting Initiative standards. So this is the one we did at One Swiss Bank last year. And so we disclosed for the first time with reference to the GRI standards. I do not want to say that it is the best materiality matrix in the world. I just want to give you an idea of what could be a matrix. And so we really did this exercise by asking to our main stakeholders their point of view regarding our material impacts, I mean economic, social, and environmental impacts. And so if you look at the red box, so these impacts are considered are the most material impacts. And so I think that this is really a mean to focus on the most important impacts of your companies. I mean that, for instance, diversity at the bottom, at the left bottom of the matrix, this is important. I don't say that diversity is not important, but for our company, regarding our vision and regarding the vision of our stakeholders, it's not considered as the impact where we need to focus on for the moment. So I think that this type of exercise can be really tricky, but it's also possible to do it with some very practical steps. And that's why we did at One Swiss Bank. But it's really it's really helpful to focus your energy and just to consider these specific impacts. And last but not least, so this is not I am not the owner of this chart or yeah, but just to give you an example, so these positive impact and interdependent leadership. So it is the ownership of B-Lab Switzerland, because I did the B Leaders training last year, and I think it's quite interesting because I'm convinced that regarding culture shifts, a lot of companies really want to go to the second step directly, so to empower people and to go to the operational aspects, so to do training, to put in place some initiatives regarding charity, for instance, or regarding I don't know, GHG emissions calculation. So very, very operational. But for me, and through this example, you need first to work on the cultural aspects. So you need to be sure that your company, the employees, and your main stakeholders are very clear on what you want to implement in terms of sustainability strategy. And when the foundations are clear, then you can go to the operationalization of that. And then you can, in a third step, engage your value chain. So for instance, if I take the example of B-Lab, they put in place an initiative with value chain of Audemars Piguet and Eldora to create some workshops with their main suppliers and try to identify some solutions to engage their suppliers to be more environmental and social impact drivers. And then this is the most difficult, but thanks to this first value chain process, you can transform the whole society. So this is a cherry on the cake, as we can say. So I think that, so at One Swiss Bank, we are in the middle. You can see the logo at the bottom of the slide. But just to synthesize, it's very important to work on the culture before thinking about the operationalization, of your activity and your sustainability strategy. Yes.
Thank you. Thank you, Audrey, very much for your strategic perspective. There is a saying, to go fast, we need to go slow, and definitely we need to reserve proper time towards culture and towards building up the strategy. You have also built up a perfect bridge to our next speaker, because the next speaker we will touch on further on the aspect of climate change. Wait, Michael, go back. We still have questions. Please go back. Yes, just no, to the question part for Audrey, because it is reserved for every speaker. Thank you. I was just saying that we actually have a perfect bridge, but it's not yet the time to pass over. I would like to share that, Michael, you have a question, right, for Audrey?
Yeah, I had one. Audrey, thanks first for absolutely fantastic and very informative speech. But looking ahead, what innovations or emerging trends do you see shaping the future of sustainable finance and responsible business practices? Just probably a few words. What are your personal opinion?
So I cannot say that I am very optimistic because to give you a better idea of the current situation, if we considered the financial sector, the Swiss financial sector, as a sector in a whole, Switzerland would be the sixth biggest polluter in terms of carbon emissions in the world. So it really means that we are not a sustainable finance place. We had some discussion with peers last year, and concerning the clients, I mean asset owners, private clients. We cannot say that we feel a real interest in terms of sustainable investment or responsible investment. This is a niche because profitability remains the first expectation of our clients. When I say our clients, I doesn't mean only the clients of one Swiss bank, but clients of private banks in Geneva, for instance. So I read some articles in newspapers, and we can consider that in the best case, 10 to 15% of clients are interested in ESG preferences, so either responsible or sustainable investment. And if you look at the Swiss Sustainable Finance annual study on the market trends, you can see that impact investing, this is the smallest part of the different type of responsible investing. And we have observed a decrease of 80% between 2022 and 2023. So for me, yeah, it remains really difficult to convince clients to invest in this type of investment because they want to be profitable on the short term. But when you talk about sustainability, you need to shape your mind. And so to keep in mind that this is on the long term. And so you need to wait for about 7 to 10 years to be profitable. But maybe to put an end to my point of view, I would like to emphasize the fact that when we have a crisis, an economic crisis, we can observe that sustainable investments are less volatile than classic investments. So for me, it could be a good argument to give to clients because we are really living in a world that is vulnerable, so what we say VUCA world. And so I think it could be something to say to clients to change their mind and maybe to have another idea of a responsible or sustainable investing.
Audrey, thank you very much. And I'm sure that everyone has a question for Audrey. So I would invite you towards our Global Impact Alliance Network group where we can continue this discussion. And thank you, Audrey, for bridging over to our next speaker who will be talking about climate change and greenhouse gas emissions.